Investment group Micromega posted a 27.2% rise in headline earnings per share to 20.94 cents. That's from 16.46 cents a year earlier. Revenue is up 13.7% to 775.5 million rand, while profit from continuing operations grew 61.9% to 41 million rand. The group said that it would consider a dividend payout in its new financial year after the completion of the group's restructuring drive, which saw the disposal or closure of non-profit making operations. And we're going to dive right into it. Paul, let's throw it to you. Dave King behind this one.
Yes, well, you put your finger on the most interesting thing about the company, because Dave was historically quite a controversial, colourful figure on the South African business landscape. Greg Morris, his trusty lieutenant always. You may have noticed about a year ago, Dave came back into the business and said, look, his court case with SARS is not taking up so much of his time, so it's fine, he can go back in there. It's a diversified industrial holding company, and you've got to ask yourself whether the asset mix is entirely appropriate. It's a small company, that must be said too, so a question of its relevance and of its interest, but I'm looking forward to what the guys have got to say.
Well, let's throw it to Dan here. Dan, have you done your homework on Micromega?
Yeah, look, I have. It's quite an interesting business. It is a holding company. They've got controlling stakes in about 6 different businesses. And what I find particularly interesting is last year they actually restructured the group quite heavily. They actually got rid of a lot of their businesses that weren't performing. So it just shows, along with Dave King, who came on board beginning of last year, that he's had quite a big role and quite a big say, of course, in calling those shots as a chairman as well, to along with the rest of the board, to get rid of those companies that weren't adding any value, and they've decided to add businesses that they think in the future will that'll add to their business model going forward.
Daniel, do you think that's the reality, that as they add businesses, their value proposition is going to increase?
Well, I think first of all they've got to make sure that what they've got right now is working. First look at the results would suggest that that is the case. However, if you look back to the results in the previous financial year, quite a few of the divisions, it's quite hard to see because of the renaming of certain areas, but quite a few of the divisions posted significant negative numbers. So what we could be looking at here is just the base effect in these numbers. I mean, if you look at them first glance, up 30%, up this, up that, looks very, very nice. I'm just concerned how much of it is a base effect from last year's poor performance. And I think in time we'll have to see. I'd prefer to give it a bit of time to see actually what happens.
Very valid comment on that front. How much of this is a base effect?
Yeah, I spoke to the corporate finance guy at Micromega a couple of weeks back, because he called me and said, how do we get more, media time? Because we feel as though we've done all this corporate
And then you said, well, let's discuss Micromega on Hot Stocks.
That was a coincidence. But now I'm thinking, I mean, they are obviously, as Daniel's pointed out, reorganizing the corporate profile. They've done quite a lot of reorganizing, and they've grouped certain parts of the division as discontinued. And I mean, there's a lot going on under the hood, but then frankly, that's always the case with diversified industrials. As they say in the classics, there are too many moving parts. So you don't know from one reporting period to the next where the good news is going to be coming from or not. But I mean, be that as it may, they are making profits. They have the backing of King. The question is this a vehicle for a corporate growth kind of agenda? Will you double your money on a stock like this? I don't know. I guess that's the question.
And of course, Buffett says don't invest in anything that you can't understand. Yeah. Do you think you understand this enough to invest in it?
It really is quite straightforward. They are a diversified industrial sort of business. They're actually listed in, I think it's in the services sector of the JSE. So they have a whole lot of businesses, and all the businesses that weren't performing, they canned them. All the businesses that are doing well, they're looking to inject more capital into those and to grow those further, take those up into Africa. But is it a company that's going to grow much more from here? It was R1.05 in 2010 odd. It's now at R3.40. So it's already made you into a mini Buffett in some way if you were invested. But at these sort of levels, it's somewhat maybe pricey. And looking at what Daniel said going forward, some of these businesses they've just really taken on board now, and they haven't really had any earnings from these companies as of yet. So going forward, it'll be interesting to see if they have good revenues from these new businesses.
Well, if they don't like them, of course, they'll just can them down the line, it appears. If they don't work, it's off the table.
Well, it's worked for them this year, so.
The new businesses in the fold. I'm kind of being facetious here because I'm saying they'll take on these new businesses. If they don't work, they'll can them.
Look, Greg has got a lot of experience with the outsourced financial model, because remember, that's what he and Dave King did for the beginning, which was to kind of do treasury management for companies and so on and so forth. So that's there. That'll continue. They seem to be making a push into this kind of web technology, hosting services and all that kind of stuff, which is an exciting area, though clearly not something where there aren't other competitors. So all things considered, I mean, the question for me is a big maybe, but in a rising, booming economy, they probably will do well. It's been knocked down. It's a kind of continued.
Unloved. It's an
Exactly.
unloved stock at the moment, but you said it's rallied hard to this
It's rallied
340.
really hard, and looking at
Probably not on huge volume, to be
no,
fair.
it's very illiquid. Of
Quite
course.
easy to get it higher.
Yeah, but I mean, it has in
Being
technical analysis, it's formed what we call a bowl formation. So you would normally measure from the bottom of the bowl to the top of the bowl and project that up. So there is still somewhat a bit of upside according to technical analysis, but yes, it has had a big run, and I would be slightly cautious with the liquidity to enter at these levels.
Can I ask a question, Daniel? I mean, you guys run money, you run sizable funds, and the question I'd have to ask you at 361, would this be the kind of company you could say, let's take 15% of this thing and see whether we can double our money in the course of 18 months? I mean, is that the sort of thing that you'd be considering, or just way too risky?
Not for this stock. Especially not after, like I said, I'm not sure what's operational, what's a base effect. There's quite a few businesses in there. There's a lot going in within those businesses. Like you said, there's a lot of working parts. For us, risk management is a major theme. And unless the returns are fairly predictable with a low level of negative probability outcome, especially with a stock that has the illiquidity of this stock, we wouldn't go anywhere near it.
Paul, would you go anywhere near it?
No, I mean, but I'm feeling bad because now Russell, the corporate finance
He
guy,
asked you for
phoned
this
me,
airtime, and now
this
what
is
you're doing
working
is
out
dissing the
badly.
stock on air. Oh, he's never going to phone you again, I can promise you that, my friend.
Oh, no.
So, but you're going to let me pass on. Shall I go straight to Dan on
Is this
this
the part
one?
where we say hot or not?
Well, let's go hot or not at this point. I think we've discussed Micromega as far as we're going to take it this evening without getting Paul into any more trouble. What do you think,
Okay,
hot or
well,
not?
Well, for me, I'm somewhat mixed. I'm not hot, but I'm not cold, and the reason is because I like what the company is doing.
Now, you know what I say to people?
I like what the
we say
company's
they're
doing.
neither hot or cold, you're an economist.
I'm probably in the middle. So I'm somewhere in the middle. I like what the company's doing. I like the way they got rid of the bad assets, putting money into the better ones. They're quite focused, but with the big run in the share price at these levels, I wouldn't be a buyer. If it happened to pull back somewhat, I would maybe have a look at entering as a punt, but doing good things, I guess.
The one thing they asked me to do on this show is to get an answer hot or not. So I'm not moving on
lukewarm.
until you.
Lukewarm.
I'll give it to you.
Also
Daniel.
not. So
Also not hot.
yeah,
Not
not
hot.
Not hot for me.
Paul,
No, afraid not.
not even for
Maybe
your friend.
next year.